Good morning, traders. It is Thursday, May 12th. Let's take a look at our last pick. That's how I start all my videos off. I want you to get a feel for the track record. Been hitting so many trades in a row. This is another winner. UAL. I showed you that Tuesday morning before the open, about an hour before the open or so. Got the video out. I told you why I'm short the market, why I like this stock for a short. We wanted to see it below that 50-day moving average. We'll take a look at the daily chart in a second. You can see how it held up pretty well on Tuesday. Now, on Tuesday, I did mention to you that the market was going to open higher, but that I felt that those gains would quickly be given back. But you can see the stock was relatively strong. Orange line above zero means that it's strong relative to the S&P 500. However, yesterday, right in here, it started to shed that weakness and it got below the 50-day moving average. Boom, here we go. Nice drop today. So let's go into the daily chart. Take a look at what we've got going here. Upward sloping trend line, breach to the downside. Major moving averages coming into play. Put the 200-day up there, 100-day, and the 50-day moving average. And you can see this was really the key to the trade here is we wanted to get below that 50-day moving average. We closed below it yesterday. UAL had relative weakness. Boom. There is your drop today. Below all the major moving averages. I think UAL still has lots of potential downside. Yeah, little sticky point right here near the low of the day. If the market starts to decline, this stock is going to follow suit. So I like UAL still. I like NUE. That was my short from last week. That stock continues to get pounded. I believe it was down to almost 122 today, $18 winner in that direction. So these picks are working out for us. I'm going to take a very quick pause and then we'll get into the market analysis and we'll find another pick of the day. Okay, so let's take a look at the driving market forces right now. We need to favor the short side. I'm going to go into the daily chart. That's where we should start all of our analysis. You can see this breakdown through horizontal support. And in my last video, I'd mentioned to you how the FOMC bounce that we got back in March did not materialize. 2 weeks worth of upward pressure. Here, 2 hours. That's all the rally that we got after the FOMC statement. And then Friday, wham, excuse me, this is Thursday after the FOMC statement. Down big, follow through Friday, then we start cracking through the support level. Now buyers look at the chart and they go, I think I'm going to be able to buy at lower levels. You also have an acceleration to the downside. So when you have a market that's done this for the last 12 years, buyers are going to be very, very stubborn. The bid is going to remain strong because everyone's been conditioned into buy the dip, buy the dip, buy the dip, buy the dip. And now they finally start to see that there's not a lot of enthusiasm by buyers and the market starts to sell off. As the market starts to sell off and that selling pressure starts to accelerate, the bounces that you used to see will be shallower and they will be brief relative to what we've seen previously. And then that selling pressure starts to really accelerate. If you're a swing trader, you have to favor the short side right now. I do not see a meaningful market bounce until we have a capitulation low. That means that the bottom has to drop out. I mean, maybe even a couple of 100-point S&P sell-offs back to back, that gut-wrenching, oh my gosh, what is happening to the market? And then during one of those deep troughs, usually happens in the first half of the day, you set that low and you rally back like there's no tomorrow. I don't know that on a weekly chart I'll be able to get back to the capitulation low that we saw. Yes, like this. This was the pandemic. You see this big, deep low. Look at these sell-offs here. This is a weekly chart of the S&P 500. Just the bottom absolutely dropping out. And then one day you hit those lows right in here. Buy, 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 buy. Just relentless buying. When you see that type of formation, then you know that you have a substantial low that might hold for a while. And if we go back, we'll also notice this is what happens to VXX or VIX. Either one of those, you're going to see a massive spike. And we haven't seen that yet. So I believe that we still have some downside. Of course, we're going to have some short covering rallies, and they can be pretty violent. So we need to make sure that when we have big market drops, that we take some profits on our short positions, and then we'll have an opportunity to reload when the market bounces. So that's the mode that you have to be in. Get a nice big drop, take your gains, wait for a bounce, sell rips, buy dips. So that's where you're covering your short positions. So you want to wait for those deep troughs, take your profits, wait for the bounce, reshort, all the way down until you see that capitulation low where the bottom drops out and then you get a big reversal with a bullish hammer, get that big spike in VXX. I am not going to set any targets right here. We've blown through most of the targets to the upside. So I could put up major moving averages and everything, but we've gotten through a lot of the support levels. I'm going to go more off of the price action that I see intraday, and I'm going to be watching what the VIX and VXX do. When I see that combination, then I know that there's going to be a meaningful low that the market has put in. Until then, I'm going to favor the short side, and I'm going to expect that there are going to be some bounces. So buyers right now, they are not worried. There's no FOMO going on as far as, oh my gosh, this is the best buying opportunity ever. I need to be in there right now. I need to be buying aggressively so that I don't miss the next big market rally. That's not the mentality right now. It is risk off mode. So let's take a look and see what we can find in terms of some shorts. I can go through all of my searches here, and we're going to go into a 5-minute chart so that we can see what happened this morning. How would we play this market? Look, hey, Pete's bearish. Look at this big sell-off that we had yesterday. Oh, market down. I don't want to miss this move. I got to get short right here on the open. No, you don't. If you take a look at the daily chart, if you're a day trader, look at the overlap that you have in these candles. There is not one single day where you have to come in and worry that you're going to miss something in the first 45 minutes of trading. Let this volatility play out. Wait for sellers to show their hand. And what we've seen in the last week is, if you look, and these are very important clues that you need to be able to pick up on. So if you look here, this is the start of the day, start of the day, start of the day. Are you noticing a pattern here? Well, the pattern is that the market tends to establish the high of the day very early on. So you get a sell-off, you get some nibbling, buyers come in, they test, see if the sellers are still there. Yep, they're still there. Okay, sell, sell, sell. Come in, you get these little bounces. So early in the day, that's when we're going to tend to see the most buying pressure. And that's what we're seeing so far today as well. You can see we gap down. Now look, we're trying to fill in this gap, and we actually did fill in the gap. So if I come in during the morning and I see that 10P is in a bullish cycle, it is on a bullish cross, I don't need to be shorting right here. My best approach is to wait to see what this bullish cycle does. How far will it fuel the market rally? Well, in this case, we got back and we filled the gap. Okay, that's nice, but we can see on the way back mixed overlapping candles. So what? What does that tell us? That tells us that it's very choppy price action and that this little rally higher is not very strong. So you rally, retrace, rally, retrace. So we can expect to see some selling sooner or later, we want to be evaluating stocks right now. If we want to be positioned on the short side of the market, then we want to look for stocks that during the course of the last hour have not participated in this rally. That is a sign of relative weakness. That is a sign that as soon as the market stops going up, the stock is going to lose its bid. And the reason that we're trading stock is because we have that selling pressure. We know that institutions are unloading shares because the stock has not been able to rally with the market. It tells us that there's natural selling pressure. So that's what we're going to be looking for right now. And I'm going to put up custom search, and we're going to take a look and see what kind of stocks we can find. And one of the stocks in this list, what I was looking for was weakness versus the S&P 500 across longer time frames, daily, 4-hour, 2-hour, and I also want to see that there is a bearish trade signal on those same time frames and a bearish trade signal M15. So I run the search. These are the search results that came back. I've got one that I noticed earlier, and we're going to take a quick look at it to see if it's still preserving its relative weakness, because that is going to be the pick of the day. Now I like this because you can see visually upward sloping trend line, many touches in here, here. So this is a nice upward sloping trend line, violated to the downside, below all the major moving averages, below horizontal support, and you can see how the selling pressure has been picking up. Now we've got a bullish hammer right here because the market has been in rally mode, but it has not been able to close the gap. So there is still some relative weakness in this stock, and there you can see. So market on its high of the day closed the gap. Stock on its high of the day, not quite, and not able to close that gap. You can see that it's starting to pick up some relative strength in here right now. So we want to make sure that this gap is preserved, and we know that we don't need to rush in and short this stock right away because the market is still trying to inch its way higher, and we have heavy volume on the stock. That's also a good sign because we'd like to see those technical support levels break down on heavy volume. I like SI as the short of the day. Let's go in and take a look at stocks that are currently weak. I'm going to run this search again, and we'll take a quick look through these and see if there's anything of interest that pops right out. RCL maybe. And I say that because UAL was weak. That's our short from 2 days ago. And we're starting to see some weakness in leisure and entertainment. SI is still on the list on a 15-minute basis. So I still like that. And I'm going to shift to a 5-minute basis because if the stock is still on a sell signal on a 5-minute basis, that tells me that it's still weak right now. And so let's see what else we bring up here. I really like that SI short, so I think that's one that we're going to stick with. Yes, that's bouncing a little bit. And we'll take a look at one other way that we can find these shorts. I can go in, and instead of heavy volume, I'm going to swap that out, and we're going to take a look for relative weakness on a 5-minute basis. So that stock is still weak relative to the market. Mark that off. Let's see if we get anything. Okay, so these should be some pretty good stocks on the downside. And that's what relative weakness looks like right there. You can see how the stock is continuing to drift lower when the market is in rally mode. That is exactly what we want to see. I'm going to go into the daily chart, and I'm actually using 5-minute charts right now instead of daily charts. I'll check the daily chart after I find something that's on its low of the day, because there's so many weak daily charts right now because the market's been pulling back. Upward sloping trend line, catching probably 3 points. There's your breakdown after earnings. Stock continuing to break down in here. Yeah, this is probably going to be a nice short. Wow. So you can put that on your watch list as well. But I'm going to stick with SI as my short pick of the day. This is how we do it. If you're wondering how in the heck we get trade after trade after trade correct, it's because we have a systematic trading approach that starts with the market. Right now, the market is weak. We are favoring the short side. We can expect to see some little short covering bounces that last a little while, and then the sellers will be back. Little short covering bounce, then the sellers will be back. Until we get that big whoosh lower, we have to assume that the market is going to continue to drift lower. We've got all sorts of issues brewing right now in China. We have supply disruptions. We got coronavirus. We have super heavy inflation. We got a Fed that's going to be tightening at least 50 basis points. We had a hot CPI number yesterday. Lots of reasons for the market to be selling off. And if you take a look at the PE ratios for some of the biggest companies like Microsoft, Apple, Amazon, they're very rich. They're high. So there's plenty of room on the downside. If you like the video today, please leave your comments. Please tell your friends, share this research with them. We will see you in a couple of days. And I'm pretty confident that the market will be lower than it is right now, and SI will be lower than it is right now. SI is your pick of the day. Thank you. We'll see you then.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.